Happy hump day out there, friends. Your boy here. I think I have COVID. I don't know if there's any point in getting tested. My aunt came and saw me this weekend. We both got the same crazy teeth chattering shivers on Monday night. And all I can tell you is it's hitting me in waves. And last time I had COVID, that's the way it was. It just like kept coming. It kept coming. It's like my body was beating it back and just kept coming. So the show must go on, however. I refuse to let any sickness take me down. Cannot do it. Canceling appointments sucks, though. You know, not my thing, not what I want to be doing, but I don't want anybody to get whatever this is. I mean, teeth chattering. My teeth were chattering so much Monday. Let's take a look. We got a few days here. Things look good. I had the wrong thing up. This is what you should be looking at. What I've been telling you about the Fed. There's a lot of pressure for the Fed to so we I hope you heard that. I hope you could hear that. That's the first time I've actually ever tried to play a YouTube video, but that was Ross saying the pivot, doing the pivot speech to Chandler in the hallway while they were trying to bring that couch in. So anyway, long story short, there is a lot of pressure on the Fed here, not just political pressure, but pressure from every single direction because they've done the exact wrong things at the exact wrong times. When the market was hot as a firecracker, they were buying bonds, lowering rates, stimulating when it was completely unnecessary. Then once we got to an absolute high, and this was when we found out that Fed governors were actually buying stocks. Remember that? And they quietly said, okay, we're outlawing that, which means they all had to get out. And that was the exact top of the market. I mean, so corrupt, such bullshit. It's hard to even believe that they did it and got away with it. And now they've rug pulled everybody. Everybody got rug pulled and things got bad. It now appears that the markets believe the Fed is going to pivot. Okay. Here's a few things. Remember what I told you when the change comes, when the actual bottom is in bonds, when rates are going to drop, we're going to see a lot of green candles first, and we're not going to know why. There's been no reason for this. Let's look at the chart. We have no reason here to believe that this move right here, which looks very systematic too, by the way, but we have no reason for this. There's no inflation report that came out good or, nothing positive for bonds or, there's nothing. The only thing we've got, which should actually be bad for bonds, is this DXY breakout. So this is that we've broken out of the upward channel. Okay, we're in for a very long time. That upward channel, we broke through that. So now I've redrawn this. This is a daily chart. And we have, this is the next upward channel of support right here. As you can see, each one of these red arrows indicates where a point in which the Fed raised rates. All right. And that causes the dollar to get strong. We've seen a lot of weakness in the dollar. That should be bad for bonds, but right now bonds are rallying. So it's a very, very interesting scenario. I'll talk about that more in a second. I want you to see, I called this a couple days ago, the reverse head and shoulders that we had right here. There's one shoulder, there's the head, there's the other shoulder. When this right shoulder is higher than the one on the left, that usually means we're going up. We were right about that. Rates have dropped a lot. If you look at what's on Mortgage News Daily, let me tell you, my rates are so much lower than this, I can't even show you the site anymore. I quoted a 6.375 on a 30-year fixed conventional today. Over 20% down payment, conforming balance, but yeah. Then, and these are just averages accumulated from other sites. FHA VA closer to 6% today. 6.125 at one point, 6% flat. And that's really just with 640 credit or better. So much, much better than these rates here. And again, these are just averages. So this is a good site to see averages. But like I said, my rates are lower than this. This just kind of has everything in one place for you. So your rates go down quite a bit today. But let's look at the forecast here. Or this really isn't the forecast, would be the future. Let's look at the historical run that we're on. Let's look at this whole situation, the whole supply shock situation with rates versus what's going on with sellers and what's going on with the mindset of buyers. And this will tell us a whole lot right here because we were very used to these lower mortgage rates. I mean, this takes you back to 2020. This is actually 2019 right here. See in the threes, and we're just kind of in the threes for a while, and then dips down into the twos, and we stay in the twos for a while. We peak out at the threes, and then all of a sudden, this year, beginning of the year, we see this big ramp up. And this first ramp didn't really throw the market off a whole lot. I mean, the first quarter really wasn't too bad, but we saw it retreat, and it looked like, okay, that was the top. It looked like 578 was the top. I remember I predicted 6.5. It looked like that was the top. We came down to 4.99. That was in August. That's not very long ago, a couple months ago. This is what has really, really put a dagger in buyers being aggressive in a situation that's actually good for them. It's hard to see because we're a payment nation. We're a payment nation. If we were a cash nation, it would be a different story. Buyers would love this situation, but we're a payment nation. And so being that that's the case, seeing rates now at 6.94%. That's the average right now, 6.94. And that was as of last Thursday. We'll get new numbers on this tomorrow. I expect this to go down. So the question is that the peak? Is that it? Let's call it 7%. Was that the highest we're going to see? I actually starting to believe that that's the case. Starting to believe that this second run here, markets move like this. They tend to go up, pull back slightly, move up, pull back. The second time is less reliable for a continuation. So it's more likely to break down, especially if the Fed comes in any way. Again, they don't have to do anything. People, whenever I say this, people are always like, oh, you think they should buy more bonds? You're crazy. Well, listen, if you're willing to buy bonds at a time where things are good because you're fixing it, but you actually broke it, then why wouldn't you be willing to buy bonds when it's actually broken? For sure. You have to, because if you're the fixer, if you're the tinkerer, if you're the mechanic, you can't go in and do work on a car that's perfectly fine, and then when it actually breaks down, go, nah, we got to let it be. You have to get in there and fix it. So the good news is they don't actually need to buy bonds. All they have to do is just threaten it. We know Goldman Sachs has been pushing these prices down, mortgage-backed securities, and bonds across the board, not just mortgage-backed securities. Bonds across the board have been getting obliterated by Goldman Sachs and other firms that ride their coattails. We know this. They've touted it in their earnings reports. They've high-fived one another. Other people have invested and made money alongside them, buying the stock. Goldman Sachs stock's up nicely. They do a good job making money, don't they? At all costs, at any cost. So we know that there's room for this to unwind, and the Fed doesn't have to necessarily do anything. If they just say the right things, that'd be enough. So that's really all I'm looking for, is them to go, you know what? We may need to reconsider some things. Literally, that's all they have to say. We have to reconsider our position on things. And woof, you would just see everybody go, oh gosh, the roaches would scatter. Oh my God, they might come after us. So I'm not just looking at the DXY. So this is a dollar index. This is pretty telling. There is support right here. Okay, so right in this area, right here. And that's where we are right now. Okay, there's some support right here. And then we're going to have to just see how it reacts off of that. You know, it could bounce off of that in this trend line here. That would make sense for it to do so. However, if it nukes through here, that is the market not just expecting and predicting Fed pivot. That is the market that knows it. And believe you me, there are many people who know what's going to happen long before you and I see it in the news. And that's what these candles are right here. So what I was telling you, we're going to see the green candles. You're going to see things moving. This isn't a huge move yet, but just let's watch for continuation here. Let's watch for continuation here. We're approaching some moving averages. You know, these are going to be important points of resistance. Let's see, if we just fire through these things, okay, then that is all you need to know. Like if there isn't just basic, simple rejection off of these a little bit, oh, we go sideways, maybe we go down a little bit, and then we go up. If there isn't even just that, then okay, it's not a technical situation. Simply covering the massive shorts that they have here and just unwinding this thing because they know what's coming. They already know. If it's been decided, people already know. Before we see it in the news, we see it in the charts. Always. That's just how it works. The whole system is corrupt. So you just have to understand that's how it works. And so because of that, we have to look at the charts. That's why we play on the charts. A couple things here. Okay, so we talked about that. DXY. Not going to really get into, I guess, stocks a whole lot here, but the NASDAQ has been getting romped, and there's a few good reasons why. This is one I'm, having second thoughts about. I'm building a big position in Meta, aka Facebook, for the long haul because I do believe the metaverse is going to be massive. And it's an early adoption phase right now. The problem is they're spending too much money on it, almost $10 billion in losses for a quarter. That's a lot, Zuck. I mean, slow your roll, bro. Figure out a way to get it done a little cheaper. Maybe outsource. You ever heard of a virtual assistant or something? Good Lord. Good Lord. Zuck, get it together quickly. Their business is shrinking. Their advertising business is shrinking, and they're spending an insane amount of money on the metaverse. This is why you dollar cost average into these investments. This is why I buy a little bit every week. I'm buying like 10 shares a week. And the reason for that is because you don't know where the bottom of these things is. You don't know where the bottom of the overall market is. But Facebook is transitioning into priced as a value stock where there is massive, massive growth potential just 3-4 years down the road. So anyway, it got clobbered today, down 20%, 75% from the highs of the year. Really ugly stuff. No bueno. And the NASDAQ continues to get smoked. Home price is also cooling at a record pace. You see, we still have a 13% higher average price point for homes than we did a year ago, but you're seeing a lot of contraction there. Now, I will tell you this. We just had one yesterday. A lot of offers recently, a lot of these recently that are multiple offer situations and we're losing. So we just lost another one yesterday, which was a condo for like $450,000. There's 5 offers or something like that, and they didn't take ours. So it's not a complete dire market like a lot of people would think it is. Now, certain price points, the higher the price points, I think it just gets dramatically more difficult. Like 800 plus starts to become really tough. You're starting to see single family homes now, more closer to 600,000 instead of 750 had to be. Now they're getting more closer to 650, 600. I have a client today who heard about a deal as a pocket listing, 530,000 for a detached home. You're starting to see prices get a little bit more realistic. They really sound like great deals to me, especially think about this, especially if we do get a Fed pivot. And just imagine, like I don't have a Fibonacci tool for this chart, but I would love to be able to see what it looks like. Where is the first fib level off of the bounce here? This is the bottom. We are right now just a few days off of being at the worst interest rate level we've seen in years and years and years, a decade or more. I think it's 11 or 12 years. So if that's the bounce point and we were to draw a fib from up here, like what's the 50% retracement from 110, let's call it 111 to 94? What is that? 17. So we do 8.5 on there, be like 104, be like up here. That's the 50%. That's not even like a bullish. That's just a regular turnaround point for a retracement. That would have rates dramatically lower than they are. They're like 3% lower than they are now. Almost 3% lower. So instead of average rates for conventionals being around 7 or whatever, they'd be around 4. That's just if we get a 50% retracement. It could go much higher than that, especially if the Fed actually does something and doesn't just, threaten it so they can get the market manipulators out of the way. And this is something that could happen within the next 12 months. So imagine paying today's prices, getting yesterday's interest rates. That's what the buyers in the market today have the possibility of. And so they're starting to realize it. They're starting to see the writings on the wall. They're starting to see what's going on, and they're firing away at these properties. So as rates are dipping here, take advantage of this. Make sure if you're in real estate, make sure your clients know about this. If you're in mortgage, my God, let people know. Let them know. We got to get the word out. I mean, you don't see anything on CNBC about rates dropping, do you? Oh, where's the article about how mortgage rates have gone down? Let me look. Politics, financial bullshit. They're not going to do this for us. We're the mouths. We have to let people know what is going on. Because if we don't, people are going to continue to think, oh, rates are way too high now. Yeah, we need prices to come down a lot further. Oh, wait, did you know rates have gone down quite a bit? Oh, what are they now? People need to know. I'm going to go through tomorrow. Everyone is pre-approved with me. I'm going to go through tomorrow and tell them what their updated interest rate is. Hopefully it'll be even lower than it was today. But you got to let people know, because these guys ain't doing it. There's too many other fish to fry, and they actually prefer the market to crash. Way more clicks on their website and revenue in their wallets. Feel me? Okay. So long story short, things looking up. We very well could see the bottom. The bottom could be in here. That's the action in the dollar index that really makes me believe that, because in the past, when we've seen these sort of retreats, these retreats from the highs, these are all very technically normal, and we never really broke anything. In fact, remember months and months ago when we were tracking this, we were in a certain ascending triangle or a certain ascending channel, and then we broke out of it, and I had to redraw it in a more vertical fashion. And so we actually cascaded higher on this index months and months ago. And now these red arrows are where the Fed has raised rates, FYI. And now we're breaking down. But this time you can see it's different. Look at these pullbacks right here. Look at these pullbacks. Pull back higher, pull back higher, pull back higher, pull back higher, pull back, rocketed higher. This was a pretty sharp one right here. That was not normal. This one right here looked like it was going to be a normal pullback, and maybe this was right on the edge, and we busted through. So finally, I mean, those kinds of moves in a trending market just don't happen that many times in a row. This is really, really overdue. And the possibilities for this thing to come down, I mean, way, way lower. This would send stocks, crypto, really any asset that's priced in the dollar would send it much, much higher. So remember what I told you. What was that, 2 weeks ago? Somewhere back in here. It feels like it's about time to exchange these dollars. I'm heavy in cash right now. Exchange these dollars for something that is priced in dollars, meaning it's time to rotate out of cash and into assets. Right? And I have been doing that and will be continuing to do that. I'm deploying capital at this point. And this is the reason why. Cash was doing well. Cash was doing great. That's what this chart is for. Now it's time to deploy. It is time. It's been time, actually, for a couple weeks. First time I said that. Hopefully you saw that video. That was the time to do it. And it is still the time to do it. I do not expect this thing to necessarily rally from here. In order for this to rally, again, we would need to see another one of these red arrows. We'd need to see the Fed raising rates again. We need to see the Fed talking hawkishly, saying we don't care about the economy. We don't care about these politicians. F all of you. We're just going to keep raising rates because we literally don't know what else to do. We're a bunch of bow tie bozos who really have no boots on the ground. We're just looking at pieces of paper, and we think we're smarter than all y'all. So if they did do that, then this thing would rally. But if they listen to the pressure, if they pay attention to what's going on in the market, if there's any sense used at all, they will at least stop raising rates. At a minimum, they just stop raising rates. And that in itself will provide a tremendous amount of relief across all fronts. If they also, in the process of stopping the raising of rates, just say, hey, we're considering other actions as well to help temper and calm the markets down. That's all you'd have to say. Literally, that's it. And I hope that they're smart enough to figure that out. Hey, here's a good comment. I love the contrarian point. Could be a bull trap. Too many people shorting. So they got to set up a bull trap to make money from retailers and go back to shorting the market after it got enough retailers. Well, could be. It's always possible, right? You always look for those traps, especially when you break out of channels like that. Hey, is this a trap? The follow through on this thing was pretty significant, though. Those are super bearish candles. This is a daily chart too. So this isn't like a low time frame, like a 1 hour chart or something. This is a daily chart, huge follow through. I don't think it's a bear trap, I think is what you mean. I don't think it's a bear trap. And I don't think there's that many retailers trading the dollar. I could be wrong. I don't think there is. I think a lot of retailers are trading like stock futures or cryptos, stuff like that. I don't think there's a huge retail component trading the DXY. I could be wrong, but I haven't seen it. Nobody that I know trades that. So, but it's always a good thing to think about. Hey, is this a trap? Because the market does like to set traps. It's a great point. Essentially, the market just flows to where the liquidity is. Where's the liquidity? That's where it's headed. If you can figure out where the liquidity is, then you can figure out where the market's headed. I'm not going to get tested for COVID. Pretty sure I have it. I'm just not going to go anywhere. I'm going to quarantine myself and get better. In the meantime, obviously, I'm good. I got the hell COVID the first time, the 12 days of hell. I got that one the first time. So I'm good. Like, I think I've had COVID one other time. I think this is my third time. And it didn't hit me the second time that hard. This time it hit me pretty hard out the gates. But I'm doing a lot better today. And I will beat the shit out of COVID this time, just like I did the last time and the first time, even though it took me 12 days. I thought I was going to die. I will win. And I will be here working. I got a lot of time on my hands. I got like 3 loans, y'all. That's a fact. It's crazy. So I got plenty of time to help you out. Plenty of time to hook you up. Give me a call, shoot me a text, or an email. Whatever you're feeling. If you want some of this super low wholesale rate action with no lender fees, you know who to call. Send your friends and family. I'll take care of them. You guys have a great night. I'll see you soon.